very good evening to everyone. Welcome back to our global online platform. This is Dr. Swati, your commerce educator. We are taking classes for NTA UGC NET June 2024 cycle. In today's lecture, we are going to discuss the most important and most expected MCQs on income tax unit. After seeing this lecture, whatever the doubts you have related to the income tax practical questions going to be clear, and you also understand what kinds of question you will be in your examination. So now, yes, before going we are going ahead, we let me quickly taking your attention toward about the global online. And here we are taking the NTA UGC NET June 2024 complete course for the commerce and management. And this session is started on 8th April, and here you will get all the daily lectures, okay, and the recorded video lectures, complete syllabus notes, and full syllabus test, PYQ test with the solutions, and the 4000 plus MCQ series, and with a complete paper 1 is free. So you will get the 20% of the discount if you enroll in this in global online for the commerce and management. And this amount is for P1 plus P2, that means paper 1 and for the paper 2. And here is the contact number is given to you. If you have any difficulty, if you have any problem, you can get in touch with this contact number. So without wasting our time, let's start with our first MCQ question. That is, let's start. Okay, so first question is, Mr. Rajesh has a 3 house for the self occupation, and what will be the tax treatment for the assessment year 23, 24, 25 in respect of the income from the house property? B letter. So before we are taking this question, I would like to grab your attention over, that is my first question for you is that what is a charging section? Okay, what is a charging section of house property? You know that if you know that that is in this question you can understand this question is from the house property head. So what is the charging section? You can answer me in this comment box. Okay, so I will check it. So the first option is two house at the option of the assessee officer and would be treated as a self-occupied. The other house would be deemed to be let out. This is the first option. The second option is two houses would be treated as self-occupied and other house would be deemed to be let out. Okay, and the third option, one house at the option of the assessee officer would be treated as self-occupied. The other two house would be deemed to be let out. And the D option is one house would be treated as self-occupied and other two house would be deemed to be let out. So let's pause this video and just try to answer with yourself. Then after that you unpause, I will be there for you to answer you in a detail. So let's pause it. Okay, I'm just hoping that you pause this video and you try with yourself, and we will go ahead with our answer. So according to the new changes in 2001, 2021 and 2022, according to this there is some changes in the house properties area. So if you have 3 or 4 or 5 houses, okay, what I'm saying, if you have 3 or 4 or 5 houses, in that case you whatever the two, okay, whatever the two houses are beneficial for you, you can treat this two house as a self-occupied. Okay, you can treat this house as a self-occupied, and remaining the houses, it assume that they are deemed to be deemed to be let out, deemed let out. So for example, okay, if you have three houses, okay, if you have three houses, then from the three houses, whatever the two houses are more beneficial for you, you can consider it, it's like a self occupied. Okay, you can consider it self occupied, and remaining one is consider is assumed to be, that is a deemed let out. It is deemed let out or not, but it we assume that, we are assuming that this is deemed to be if let out. Okay, so according to this, you need to calculate, and from this deemed to be let out, we in short we say that DLO. Okay, DLO. For calculating this, we need a GAV. What is a GAV? GAV means a gross annual value. Okay, for calculating this gross annual value, we needed to calculate expected rent. Okay, we need to calculate expected, and how would we will calculate the expected rent, ma'am? So I will be there for you. So for calculating the expected rent, we need, there are some conditions are given over here. So if the first is, that is a municipal, that is okay, first of all, we need to calculate a municipal, we need to find out the municipal value. Okay, we need to find out the municipal value, and we compare the municipal value with fair market value. Okay, in these two, whichever is higher, okay, we took that amount, whichever is higher, we took that amount, and then we compare this amount to standard with standard rent. Okay, we compare this amount with the standard rate, and this standard rate is decided by the municipal corporation. Okay, according to the locality here. And after that, whatever the standard rate is given, then we compare with this and this, whichever is higher. Okay, again, whichever is higher, we take that amount. Okay, if this is higher amount, okay, we take that amount, then we are going to, and whichever is higher, this is our expected, this is our expected rent. Okay, after that we get expected rate. After that, from we will get a GAV. How we will get a GAV? From the actual rent we paid, minus the expected rent. Okay, if in case there is no actual rent is given and no GAV is known, then we consider expected rent as a GAV. Okay, so in this way you can calculate your expected rent. So what is the question? Okay, the question is talking about the Mr. Rajesh has a 3 houses. Okay, he has a 3 houses for the self occupation. Okay, what will be the tax treatment? How we will treat that 3 self occupied houses? Okay, in income tax from the house property. So already I said that according to new tax rule, there is 2 houses is treated as a self occupied. Okay, self occupied, and remaining 1 houses is treated as a deemed to be let out. Okay, so according to my first question, what will be the correct answer? So in here you can see the 2 houses in the option number B. You can see the 2 houses would be treated as self occupied, as I said here, and the other houses would be deemed to be let out. Okay, so correct answer is R, that is option number B. Okay, let's move ahead with here is the answer. You can see The next question. Okay, Mr. Sankal, a retailer, acquired furniture on 10th May 2023 for 10,000 in cash, and on 15th May 2023 for 15,000 and 20,000 by the bearer check. Okay, and account pay check. So 15,000 is bearer check, using bearer check. Okay, and 20,000 using account pay check. Okay, respectively. This depreciation allowed for the assessment year 24-25 would be, what will be the depreciation you will charge for the by the Mr. Sankal? So first of all, just pause this video, try to answer it yourself. So we are going with answer. Okay, I will tell you. That is, first of all, you know that government wanted that you expensed your whatever the expenses you are doing is you must do in cashless mode. Okay, cashless mode, or in a digital mode. Okay, so government want that you must be familiar, you must use the cashless or the digital mode. So government want to be, that is, use the electronic mode, digitalization. Just is government focusing on the digitalization payment method. So that's why if you are paying, if you are expensing, if your expenses, if your payment, if your payment, if you done your payment, if you are doing your payment in cash, then government not allowed the depreciation on that amount. So the maximum limit of the cash is rupees not exceeding, actually not exceeding 10,000 rupees. So maximum amount for the cash payment, that is a 10,000 rupees. If you are doing payment, if you are expense something in the in cash, and you have pay the 10,000 rupees as a cash payment, so you will get a depreciation. If you're doing transaction more than 10,000 in cash, then you will not eligible for the depreciation over here. Okay, so I will tell you, that is section 40A. 40 subsection A is for the disallowed depreciation. Okay, in case you are doing, this is for the cash payment. Okay, if you are doing the if you are doing more than 10,000 in cash, so government will under section 40 subsection A disallowed your depreciation. Okay, so according to that, this question you can read over here, that is 10,000 in cash. Okay, what is it? 10,000 in cash. So 10,000 in cash plus 15,000 in bearer check. Okay, in bearer check, and plus 20,000 in account paid. Okay, in that case 10,000 in cash. So is this eligible? Yes, ma'am. Okay, 10,000 is eligible for the depreciation. And then again he is doing 15,000 as a bearer check, and you know that as a bearer check is a working like a cash. Okay, it's considered like a cash payment. So here we will not take 15,000, because already, as I said before, already the maximum limit for the cash payment is 10,000. So here we will complete our 10,000. We have already taken that complete 10,000 as a cash payment. So 15,000 we will not consider. It will be disallowed for the depreciation. And plus, because that is account pay check. So account pay is a check. Okay, it's not considered as a cash. So account pay, you know that is account pay is like a it's like a online mode. Okay, so here we consider that is 20,000. So what will be the amount? That is a 30,000 we will get. Okay, in that 30,000 he is talking about the furniture. Okay, he is talking about the furniture. In case of furniture, the depreciation, the rate of depreciation is 10%. Okay, so the 30,000 is our amount. We'll get 30,000. We'll take a 10% of depreciation. How much we will depreciation is allowed? How much depreciation is allowed in this amount? So 3,000. So here is the correct answer is 3,000. Understood? And another some important information I would like to share with you related to this question is that in case of building, okay, in case of building, um, in case of building we will categorize it as a residential building. Okay, in this case of residential building, what rate of depreciation we allowed, that is 5% of, okay, 5% of depreciation is allowed in case of residential building. In case of non-residential building, for office, for factory, or for the godown, it will charge 10% of the depreciation. Okay, and in case of temporary purpose, if you are using some building for the temporary purpose, okay, temporary purpose, okay, in that case we use a 40% of depreciation. So what is the temporary purpose? Why we use a temporary purpose? You know that in case of construction, whereas some construction work is going on, so we need labor, and the labors are so we need many labors, and we will make some huts for them. For the construction we use some temporary buildings for the use of them. We make some huts. So in that case this is for the temporary purpose. After that construction is completed, we will not use that building. So in that case this is for the temporary purpose. So you will, in that case you will allow the 40% of the depreciation. It is most important. You need to remember this. You need to recall this. Okay, so it's about the building. Then machinery. Okay, in case of machinery and plant, in general sense, we will get 15% of depreciation. We allowed 15% of depreciation. And you know that is a depreciation method. What kind of depreciation method we will use? That is a WDV, written down value method. Okay, in while we calculating the income tax. Okay, income tax. Okay, only in case of, you know that in every case we are going through, we are using the method WDV, but only in case of energy. Okay, in case of energy power, in this kind we will use a straight line method, SLM method. Okay, and for the for books, okay, books or computer, okay, for the professionals, professional population equipment, in this case we allowed 40% of a depreciation. Okay, in this case we allowed 40% of depreciation. So this is information, and here is the answer, that is option number B is a correct answer. Okay, now next question is, okay, this is question number 3. So let's pause the video and answer me. Okay, section 80 IAC. Okay, I was already let's say uploaded the related to deductions question. This is related to the deductions, okay, sections. So please go through with that video. You will definitely easily mark this question. Okay, so section 80 IAC, section 80 IA, Section 80 IAB, Section 80 IB, and Section 80 JJAA. Okay, what will be the answer? First of all, it's really in the fifth point is Section 80 JJA is for that it's for the new employment. Okay, and this is also added in new tax regime. Okay, this deduction you will get in new tax regime also. Okay, then option first is for IAC. IAC is for the startup. Okay, IAC is for the startup. Then Section 80 IA it's for the infrastructural. Okay, infrastructural development. Okay, then Section 80 IAB it's for special economic zone. Okay, is for the special economic zone, and Section 80 IB is for the cold storage. Okay, so according to this option number A is our correct answer. Okay, this is the correct answer. Next question, Mr. Weber acquired an asset in the year 2019-20 for the use of scientific research. Okay, for 2,75,000 he claimed deduction under Section 35(1) subsection 4 in the previous year 1920. The asset was brought up into use for the business of Mr. Weber in the previous year 2024-25. Okay, this is not previous year, it's an assessment year. Okay, it's an assessment year. After research was completed, actual cost of asset to be included in the block of asset. Okay, before you understand, before you know this, understand this question, you need to understand the concept behind the block of asset. So here we go with the block of asset. What is a block of asset? First of all, we need to understand what is the block of asset. So block of asset. Okay, so block of asset is a group. It's a group of asset which having same nature of asset. Okay, which having same nature of asset, and second one which having the same rate of depreciation. Okay, so I will give you some example over here. There is X, Y and Z. Okay, X is a tangible asset. Okay, Y is also a tangible asset, and Z is intangible asset. Okay, and in X we will allowed 15% of depreciation. In case of Y we allowed 10% of depreciation, and in case of Z we allowed 15% of depreciation. So according this is the nature of, okay, this is the nature of asset, and this is the percentage or rate of asset. Okay, percentage or rate of asset. So you know that X and Y having the same nature, that is a tangible and tangible, but in this case you can see the rate of the depreciation is different, so we cannot make a group of X and Y. Okay, another case you can see here, that is X and Z having the same rate of percentage of the depreciation, but the nature are different, so we cannot make the X and Z as a block of asset. Okay, so if I am changing over here, that is X is a X if you are taking, okay, if I am taking W. Okay, W is having intangible. Okay, nature is intangible, and having a 15% of depreciation. Okay, 15% of depreciation. So in this case we can make a group of block of asset, that is a Z, okay, and W. Okay, so we'll get a block of a set of X and Z and W. Okay, uh, after 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 charging depreciation, if the value of the asset, okay, if the value of asset is going to be 0, okay, value of asset is going to be 0, in that case, in that case, uh, depreciation is charged. Okay, in that case it's okay. Okay, in that case, if the value of the asset is going to be 0 after charging depreciation, then it is considered to be a block of asset. Still it is exist, we consider that it is this value because the value is still exist. Okay, if the assets value get nil, okay, if assets value get nil, in that case block of asset doesn't exist. Okay, so in that case block of asset doesn't exist. Okay, so in this case, you know that we do not have a remain the asset, but we do not have asset, but we have a value, of that asset. So in that case we have we will get a loss. Okay, in that case we will get loss of asset. Okay, we'll loss or lot loss on that asset, and we will carry forward, will carry forward our losses with capital gain. Okay, so what is the question? Okay, so Mr. Weber acquired an asset in the year 2019 for the use of scientific research. Okay, in that case he is investing in the scientific research. He bought some asset for the scientific research, and in the case of scientific research, here is in some expenditure on the scientific research is comes under the section 35. Okay, yeah, I was giving you information for the block of asset because this is comes under in this question. Okay, there is no relation of the block of asset over here, but I will give, I would like to, I would wanted to give you this information. So but this question is related to the scientific research actually. Okay, so Weber acquired an asset in the year 2019 for the use of scientific research. There and for rupees 2,75,000. He claimed a deduction under section 35. So under section 35 is for the expenditure on scientific. If you are expend something, if you are get expenditure on scientific research, under this section you will get a deduction. Under this section 35 you will get a deduction. Okay, so here is some deductions. Okay, the section 35 1 subsection 1. Okay, revenue expenses on SR, okay, scientific research, then you will get a 100% deduction. In case of scientific research, in any case of scientific research, if you read this word, that is a scientific research word, then you will get 100% of the deduction under section of 35. Okay, so here what will be the answer? Here is the answer that he claimed the deduction under section 35 in the previous year 1920. The asset was brought up into use for the business. Okay, then he is using for the asset for the business use in the assessment year, that is 2024, after the research completed. So actual cost of asset were to be included in block of asset. So in that case already you will get 100% of deduction. What was the amount of that asset? That is 2,70,2,75,000. 5,000. In that amount you will get 100% of the deduction. Okay, 100% of deduction, that means 2,75,000 deduction. Okay, so what will be the answer? That is a nil. Okay, you do not have the value of that asset, so sorry, so the actual cost of asset to be included in the block of asset, that is a nil. So here is a nil answer. Okay, let's take a look of the other sections, because it's also important for the exam point of view. So over here you can see the section 35(1) subsection 2, research associate for the scientific research. Okay, it's also for the scientific research. And section 35(1) subsection, that is 2A, is for the company. If you're expending on the by the company for the research, scientific research, in that case you also get 100% of deduction. In case of a social science and the statistical research, okay, you will get a deduction under section 35(1) subsection 3. Okay, in case of capital expenditure, exception land acquisition, okay, in this case you will also get a deduction, 100% deduction in the section 35(1) subsection 4. Okay, then in case of the national laboratory, like IIT for research, scientific research, Indian institution for the technology, you will also get 100% of the deduction under section 35 2AA. Okay, then section 35 is for the expenditure on the company for the biotechnology. Okay, if you see that as the word as a biotechnology, you will get a deduction under section 35 2AB. Okay, this is also an important you must learn this, you must to take and remember, you just keep in your mind. Okay, then question number 4 is Mr. Weber acquired an asset in the year 2019-20 for the use of the scientific research. Okay, this is here is the answer. Then question number 5, conditions over here. First condition is unexhausted basic exemption limit for the non-resident individual can be adjusted only against STG, that is short term capital gain. Okay, STG is short term capital gain. Okay, short term capital gain taxable at the rate 15%. And condition number 2 is the unexhausted basic exemption limit of the residential individual can be adjusted only against the long term capital gain, that is LTCG. That is the full form of that is a long term capital gain. Okay, at the rate 20%, and the STG the taxable at the rate 15%. So according to these two conditions, what will be the correct answer? Option number A, once statement number 1 is correct. Option number B, only statement 2 is correct. Both the statements are correct, none of the above. So let's pause the video, try with yourself. Okay, so first you need to understand that is STG. There is some basic and the important information I would like to give you. That is the short term capital gain comes under section 111A. Okay, and here is the exemption is you will get 15%. Okay, in case of LTCG, it comes under section 112A, 112 not 1A, 112, you will get 20% of the exemption. Okay, in case of with indexation, or in case of without indexation, okay, without indexation you will get 10% of exemption. Okay, so this is the important point I would like to share with you. And so according to our question, What is the question? Unexhausted basic exemption limit of the non-residential individual can be adjusted only against the STG. Only against the STG? No. Unexhausted basic exemption limit of the residential individual can be adjusted with long term capital gain 20% and short term capital gain 15%. To according to the question, B is our correct answer. So only statement 2 is the correct. Okay, it's only that if you are noticing that where you is here is not only. Okay, if you're noticing that where they use only word the maximum time, that option is going to be wrong. So just follow these small tricks for your examination perspective. And okay, so this is the right answer. Option number B is the right answer. Okay, next question number 6. Mr. Mrudul has received a sum of 75,000 on 4th of December from his friend, okay, on the occasion of his marriage anniversary. What will be the taxable of the said amount in the hands of Mr. Mrudul? So let's pause the video and try to answer with yourself. Okay, you know that first of all it's given by his friend. Okay, if it is given by the friend and is depend on which occasion, in which occasion he is giving gift. Okay, so in case of marriage anniversary, if his friend is giving a sum of rupees something to his friend on the occasion of the marriage, then it is exempted from the tax. But when he is giving the gift to him, Mrudul, in the marriage anniversary, in that case, in the marriage anniversary, the entire amount, that is 75,000, this entire amount is taxable. Okay, this entire amount is taxable when in the when his friends giving him a sum of rupees in the occasion of the marriage anniversary. If his friend is giving gift in his marriage wedding, in that case 50,000 amount is tax free or exempted from the tax. That means it's allowed. 50,000 you can give as a gift to your friend in the occasion of the marriage. That is the maximum limit is 50,000. Okay, so and another information I would like to share with you, that is in case of his grandfather or his grandfather, if his grandfather give him some of amount in the occasion of the marriage, in that case the full amount, there is no limit for the gift sum of the gift amount. Okay, so there is no limit, but in case of friend there is a limit. Okay, so here is the right answer is entire 75,000 is chargeable as a tax. Okay, so in case of movable, in case of movable property, in case of movable property or immovable property, okay, immovable property. Okay, in case of immovable property, car, gold. Okay, car, gold, if it is without consideration, maximum amount is, if it is without consideration, maximum amount is 50,000 is exempted, or an excess amount is to be charged. Like if someone give If someone give you that is 75,000, okay, as a immovable property, as a gift, or the car or the gold rupees, the amount, so 50,000 is exempted and 25,000 is chargeable as a tax. Okay, then next question, we moving ahead with next question, that is question number 7. Mr. Yashwin, an eligible assessee following merchandise system of the accounting carrying on eligible businesses under section 44 AD. Okay, this you know that this 44 AD is this section is for the presumptive income, is for the presumptive income. Okay, and it comes under the PGBP head, profit and gain under business and profession. Okay, they provide the following details. Total turnover of the financial year 2023-24 is 1,40,000 sorry 140 lakh out of the above. Okay, 30 lakh received by account pay check during the financial year. Okay, and 50 lakhs received by the cash during the financial 23-24. Okay, then 30 lakh received by the account pay bank draft before the due date of filing return, and 30 lakh not received till due date of the filing of the return. So in this case, what will be the amount of the deemed profit of the Mr. Yashwin under section 44 AD? Okay, and under section 44 AD is for the presumptive income under the business and profession. So Yashwin is an eligible assessee for the business and profession, and in this case, who is eligible? First of all, in section 44 AD, individual, HEF and partner, okay, and firm is eligible for section 44 AD. Okay, so how do we going to be calculate? Okay, in this question, you know that is 60 50 lakh 30 lakh received by account pay check. Okay, and 30 lakh received by the account pay check. Okay, so total is 30 lakh plus 30 lakhs. What is the total? That is a 60 lakh. In 60 lakh he will get 6% of deduction. Okay, and what is the remaining? This done. Now the 50 lakh received by the cash. Okay, and 30 lakh not received till due date. So 30 lakhs is considered as a cash. Okay, because it's not received yet now till the due date of the filing return. So we will considering it that this amount is 30 lakh we will get in cash. So 50 lakh plus 30 lakhs is equals to 80 lakh. Okay, in this 80 lakh we charge tax 8%. Okay, so here is 60 lakhs, the 6% of the 60 lakhs is, you know that 3.6 lakh. Okay, and 8% of the 80 lakh is 6.4 lakh. Okay, so the total is 10 lakh. Okay, and the maximum limit, okay, the maximum limit of under the 44 AD is that is 1 crore, and you know that the 10 lakh is comes under the maximum limit. So 10 lakh is our right answer. So what shall be the amount to be deemed to be profit by the Mr. Yashwin under section 44 AD is 10 lakh. Okay, so how do we calculate? We take account pay, that is check amount, that is 30 lakh. Okay, plus another that is a bank draft is also considered as a check. So first of all, in check amount you have to pay only 6% of the tax. Okay, that is 60 lakhs. 6% of the 60 lakh, that is 3.6 lakh. Okay, then after that 50 lakhs is received by the cash and 30 lakhs yet not received, so we will consider it like a cash. We'll get a amount in the cash in future. So 50 plus 30, we will get 80 lakhs. So 8% of the 80 lakh, that is 6.4 lakh. So according to this, the total of this the profit is, that is 10 lakh. Okay, so 10 lakh is our correct answer. Here is the correct answer. Okay, the next question, that is 8th question, that is actually it's the 9th question. Okay, then rate of the education says on the total income is. Pause it and try to answer it yourself. It's a really easy question. That is option number C, 4%. Education says. Okay. Here is the right answer. Section 70-79 deals with. Section 70-79 deals with. Let's pause it and try to answer with yourself. Okay, here we I'm going to sharing something. Okay, here I will share you. How do we calculate taxable? Okay, taxable income. Okay, first step is, here is the first step. In first step we are going to compute. We are going to compute taxable income from all heads. Okay, all heads, that means from the salary, income from the house property, income from the PGBP, and income from the capital gain, and fourth one is income 1 2 3, okay, 3, that is 4, and fifth income from the other sources. These are all the 5 heads. Okay, first we compute the taxable income from the from all the heads. Then second step, after that we will club. Okay, we will clubbing of income. This clubbing of income is comes under the section 60 to 65. Okay, after that, after clubbing of the income, the third step is, that is set off losses. Okay, and this set of losses comes under the section 70 to section 18. And then after third step we are going to the fourth step, that is GTI, that is gross total income. Okay, gross total income. After we calculating the gross total income, in fifth step we get a deductions under section 80C to 80U. We will deduct, will use the deduction under section 80C to 80U. Okay, then after that the sixth step is we will calculate taxable total taxable income. Okay, total taxable income. After that, in seventh step we get some we will deduct the LTCG. Okay, and LTCG, that is full amount lottery income, from the total taxable income. Okay, we will deduct it, and for LTCG we will get 20% of the tax. Okay, or in case of lottery income we have to pay 30% of the tax. Okay, So after that, in A step, we apply slab rate. Okay, in apply slab rate. So these are the steps. The more steps we have, we will discuss in the further lecture. So according to our question, where is our question? Where is it? Yes, the section 70 to 79 deals with, yes, it deals with the set off and carry forward. Here is the right answer. So thank you so much. Um, See you tomorrow with a new session, that is the legal aspect. No, for the with the business law. Okay, we'll cover all the topics of law. So goodbye.